Okay, so what I mean in this Apple trade is, and just last night in the weekend update, I talked about how Apple at 600 should be a buy. Well, when it slices through that level within minutes, and the easiest way to show you is show you an intraday chart, and this is just a simple tick chart showing the intraday movement. You can see we open up 9:30 and Apple's at 609. Great. You're still looking for 600 as a potential buying opportunity. So Apple opens up, starts to trade lower, and then gets slammed immediately. Here's the 600 level. This is where you're looking for potential buyers. Guess what? We slice right through it, come back, test this, and continue to slam down. Now, I wasn't fast enough to, I wasn't aware that Apple was doing what it was doing. But when I saw it down, I saw it below 590, and then I immediately started watching it because I knew an opportunity was in the works and we were going to get close to it. I see it hit 582, and that was immediately when I started looking at the call spreads. By the time I pulled up a call spread, it was already trading back at 585, and I just entered the trade, tried to get the best fill I could, and kind of went from there. Why did I look at the pretty much the 585 level or so? Back in March, we had a pretty important level, 583 to 585 or so. That was a big support level. You can see the volume's pretty important there. Not as important as this 596, 597 level, but important and good enough for a bounce. And what I mean by that is Apple ran from, let's just make it easy, say 610 down to 585, let's call it 580. So almost $30. And with a move that big to trade back down to the bottom of the range that we haven't seen since really expiration Friday in March, you're going to get a bounce there, and that's just how the market works. Basically, what you're going to get is you're going to get short sellers that are looking to cover. Where are they going to look to cover? At important levels, the bottom end of the range. So you're going to find 582, 585, that general range, going to be support and good enough for a bounce. Now realize the range is $30, so the bounce should be pretty significant and should give you a bounce back up to the important level, which should have been support to begin with, the 596 to 590, 600 range or so. And sure enough, entering the trade around 10 o'clock, just before that, I think. Had to wait, but I took profits right when Apple was in the 595. It was above 595, below 596. I didn't wait for it to come down. It hit my target. I took the trade off. So originally the trade was bought for $5, sold for $6, a gain of 20%, and you can see Apple has hit that 596 level and is trading off since. Just like the NASDAQ futures, which kind of looks just like Apple. We traded lower. Apple bottomed before 10 o'clock, and you can see we were getting some bounces in the NASDAQ 100. It took one more low, one more push down, and then a reversal, and you can see that is where Apple topped out. You can see the top of the high volume area. It's a value area high for the day so far, and that's kind of your top end of the range. So right now, if you had to play the NASDAQ, you would look around 2660 as your high and 2675 or so. I'm sorry, 2660 as your low, 2675 or so is your high. You have point of control around 2668. So that's just something to be aware of. But back to Apple, the point of this video, you could see the opportunity that was there. We got our snapback. We got the trade we are looking for, and now Apple, it's pushing back down against that 596 level. So If I have to say something or anything about Apple right now, it would be, uh, if you are long Apple and you have a really big position, I don't want to say it's too late to scale out, because it's not, but you can see what happened once we started to break April's point of control. Uh, we couldn't hold those levels. We started to break down, and from there we just kept going. So, you know, eventually the market's going to wear on the best performers, and Apple was one of them. And, people go and sell their best performers, take profits where they have them, even though that's not necessarily the right thing to do. It's what people do, and it's what you should be aware of. Therefore, you can do it too. So, that's just an idea, something to look out for, potential opportunities when the market gets a little more volatile. You can do this to the upside or downside, but in my opinion, always use some type of call spread or put spread, because it helps minimize your risk. And, your reward may not be as large, but if you're wrong, at least your risk, or you won't lose as much money.